Hi everyone, welcome back to Be Rich. It's me, Vinod, again, all alone in the studio. So going to have some interesting conversations with you about what happened with the Fed, what's happening with gold, what's happening with the market and the news over the next few videos. So hang on there. There's a series of videos which will be coming out, and we'll try and get the dots connected for you. And hopefully, by end of this series of 4 or 5 videos, we'll give you some clarity on where you should be looking at going forward, because we are living during some interesting times. It is not the same old, same old. There are things which are happening which show there is something fundamentally changing in the way we do business, and of course, the fabric of our society. That has also been happening for some time, which I don't have any view on because I have no expertise in that matter. Mine is purely on investing, like I've said. The rest of it I leave up to you, what you wish to champion or not champion. So that said, the Fed did cut the interest rate by 25 basis points, that is, and we are now at, I think, 4% is where we are at. So from target range to 4% to 4.25%. So that's what we are at. And the main thing what the Fed has come out saying is that they'll continue to worry about the joblessness more than inflation. They seem to have said, we should be worried about the joblessness and not the inflation as of now. So they're ready to allow the inflation to warm up or get a little hot to prevent the joblessness in the US. And what was kind of surprising was the unanimity in the rate cut. All of them decided to do the rate cut. Of course, the new Stephen Miller guy, he wants to cut it a little more. He said 0.5 is what he wanted, but they only gave it 0.25. But they've left the door open for further rate cuts this year itself. So this is what was rather interesting. So what does this mean? That means this is good news for gold, and it's not so good news for the dollar. The dollar has already been having a tough year this year, like I said in the previous videos which I've been talking about, and this will continue to be further pain for the dollar. But this is great news for the gold. So if it all works out and this continues the way it does, by next summer we can expect gold to even probably be above $4,000, around $4,020 by next summer. We are right now at 3,600 and odd. If this continues and the rate cuts come and what all they said is going to happen, then we can expect the gold to go at peak of over $4,000 by next year. And that is going to be really interesting times for people holding on to gold. People are looking at gold. So this is what you should keep in mind. Because if you look at the American index, the S&P 500, around 30 odd AI companies is making up around 43% to 45% of the index, which is quite a huge lopside. And they are the ones who have contributed to most of the gains this year. So if you see the gain so far this year, it has been contributed by these 30 odd companies. So if you see, there seems to be a lot of rebalancing of risk by what the Fed has done. They've said before the risk was all on inflation. Now they're saying the inflation is not the real risk. The joblessness is the real risk. And if you look at that, there seems to be more rate cuts on the card. But the gold will push forward and go further from where it is, breaking the $4,000 mark. So meanwhile, all this is happening. What is happening in the UK and France and Europe is very interesting, especially if you look at UK. Sold off 2/3 of its gold way back in 1999, and recently they moved against Bitcoin and confiscated the Bitcoins, and the government is even mulling on selling the Bitcoins, and they seem to be doubling down on the US Treasury T-bills. And UK is compounding its problems further and further. That is one of the reasons why there's right now they seem to be quoting the Americans, because they seem to be doubling down on the US dollar and the US T-bill, and they seem to be holding more US debt compared percentage wise to everybody else. And this with AI automation and loan defaults going up and Fed printing more money now than saying gold is going to shine, and this is going to be more problems for the UK. This is on a macroeconomic level from outside the UK. Forget what is happening internally inside the UK. This explains to you the kind of protest you're seeing in the UK, the kind of public sentiment against the government, and the kind of pressure the government, Labour government is facing. So if you were investing now, I would say be cautious, be slow, and don't take positions which you don't want to, don't put money where you don't want the risk of losing it, is what I would say. So gold is where a lot of my money would be right now. And I would say if you are looking at investing, invest in small amounts and make sure you just within your circle of competence. And I will talk about circle of competence in the next video, or probably the video after that. I'll talk about circle of competence and why that is important to understand circle of competence, by giving you a great example on how circle of competence was missed in India recently, and that led to a situation that could have been very different for a company in India, but that was missed because the leadership did not have the vision. Like we have said many times before, how that fails if you don't have vision and you don't understand where the market is going. So this is what's happened with the Fed. They've cut the interest rate as expected. The market has priced this in already. As I said, the next three videos which will be coming about, one will be about NVIDIA, what is happening with NVIDIA and what is happening with China. That is something important to pay attention to, because that is going to show you where the whole AI bubble is sitting and how this AI bubble can burst. That is something which I'm going to talk about. Then, like I said, I want to talk about a missed opportunity, and I'm rereading this book. I've spoken about this book some time back, so I'm rereading this book. I've spoken about this book some time back, and this will tie into the story which I told you about a missed opportunity and circle of competence and why that is important. And then I'll tie this all together and bring it home about hedged ETFs and unhedged ETFs in the US, and why as an investor you should be looking, especially if you're a foreign investor investing in American markets and you're investing in the ETFs, how you should position your ETFs investments. That will be the last video winding up the series. So anyway, I hope you enjoyed the video today, and I'll catch you in the next one tomorrow, where we will talk about what's happening macroeconomically and geopolitically when it comes to AI and NVIDIA and the Chinese and the chips. So thanks for watching the video today. Like I said, see you tomorrow. Bye.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.